Good afternoon. Welcome to Midcap Radar. I'm Sonam Putra. With me is Urmaz Vatakia. Looking like a good screen, at least for the mid-caps. The Nifty, though, is down around 46 points. But we do have a whole host of news flow that we'll be tracking for you. So let's get going.
Absolutely. We'll take a look at the headlines first up. The stocks are oscillating in a range after a stronger than expected US manufacturing data tempers rate cut expectations. Consumer durables and Realty eke out gains while IT and healthcare drag while the mid-caps are outperforming.
Aditya Birla Fashion and Retail gains over 10% after it says it will evaluate the potential demerger of Madura Fashion and Lifestyle business into two separate listed entities. Aditya Birla Capital surges after Macquarie initiates coverage with a target of 230 rupees a share. The brokerage is expecting a potential re-rating on the back of expansion in return on assets.
Prestige Estates continues its stellar run after brokerage firm Morgan Stanley expects the company to grow faster in terms of pre-sales on a year-on-year basis, while CLSA issues a buy rating and raises its price target to 1,520 rupees after the company signs a 20 billion rupee deal with the Abu Dhabi Investment Authority and Kotak AIF.
Bharat Electronics rallies nearly 5% as UBS and Jefferies both are bullish on the stock. Data Patterns rallies over 5% after Jefferies initiates coverage and sets a target price of 3,545 rupees a share.
And CAMS gains over 5% after it informs the exchanges that its arm will facilitate the issuance of policies in an electronic mode. It's also in the process of establishing a Bima Central platform.
All right, those are the top headlines for the markets. Let's quickly take a look at what the rates are looking like right now. The Nifty is down 40 points. It's an underperformance, and this was something which was expected after the mixed cues that we got from the Wall Street, which were largely lower, and also the GIFT Nifty suggesting a downtick today. What is doing well and continues to do well is the mid-cap index. That one is up around 460 points. That's a 1% gain, actually, and in the last couple of minutes, we've seen that do well, and Nifty also inching a little bit higher from the lows of the day. So we'll have to see which way things go for that one. But Bank Nifty too, though it is underperforming the mid-caps, is in the green today. So it is a day like that where we do have various moves across the majority of indices and stocks as well. The small cap index, again, like yesterday, seems to be doing well. So it's again the mid-cap and small cap party.
Always been the case, hasn't it? Continuing from where we left off in FY24, what's doing well within the broader markets, though, is real estate, and that's showing no signs of cooling off at all. The real estate index continues to soar higher. The metals index continues to build from yesterday's gains as well. What is not doing well, though, is pharma, and the Nifty Pharma Index is one of the two sectoral indices that are in the red in today's session, and particularly led by three stocks: Lupin, Alchem Laboratories, and Gland Pharma. So not good going there for the pharma index, although it is still recovering from the lowest point of the day, but still in the red. But there are plenty of other movers in the broader markets, and in that segment, mid-cap movers, Mangalam is here to take us through those stocks. Mangalam, good afternoon.
Good afternoon. A bunch of stocks which are moving around and gaining, some of them with good volumes as well, telling you that maybe those who sold before this, the end of the previous financial year for tax loss harvesting, are perhaps coming back to the markets once again. So if you just take a look at a bunch of the gainers, you have the likes of BPL. I mean, out of nowhere, that stock is up 14%. TCNS Clothing, of course, higher on the back of the big move that we're seeing in Aditya Birla Fashion. And there is this impending merger. So there, there's camaraderie between these two stocks, so to say. Symphony, again, the IMD, the forecast on summer helping them. HG Infra, Godfrey Phillips as well has been on a tear this year. It's up nearly 65 odd percent. And all these stocks are gaining on the back of strong volumes as well. Then you have Saregama up 5%, CMS Info Systems up 6.5%. We have Numama Wealth, which has been doing well as well, up 6% in today's trading session, and a decent gain on names like CAMS, which you all did speak about earlier too. If you look at some of the losers in today's trading session, among the gainers are also some of these restaurant names like Specialty Restaurants and Barbecue Nation. Some of the losers could be classified as the one which are seeing some profit booking. Case in point, Zaggle Prepaid usually moves big on the upside and now is down 4.5%. Anand Rathi down 4.5%. South Indian Bank, the update not doing too well for them. V-Mart Retail and Chalet Hotels are down about 2.5%, 3.5% each as well. So a few losers and a lot of gainers in today's trading session.
A lot of gainers. That's been the story today. Yesterday as well, there are some big movers which have been doing well for two consecutive trading sessions. Thanks a lot for that, Mangalam. It's a good time to now welcome Shrikant Chauhan of Kotak Securities for a technical check on the market. Shrikant, good afternoon. What's happening with the mid-cap index and what about the Nifty? What are the next levels we'll be watching out for here?
Good afternoon, Sonal. Good afternoon, everyone. I think for Nifty, the bias is bullish. For mid-cap companies, yes, again, we are seeing very strong reversal in most of the companies. especially in those companies which have did really well in last 2 months. So I am of the view that again there is we are seeing some pullback sort of rally in mid cap companies. But for Nifty, I think the way there is a setup of the market, if there is any correction, then again the strategy should be to buy on dips. But if it breaks the level of 22,550, which is the highest point of the current rally, then the chances of hitting 23,000 would turn bright. We are of the view that we need to be more and more stock specific till the market is not crossing 22,550. But if there is any correction, then close to 22,300, certainly we should look for adding long positions.
But does it have enough legs, Srikanth, to go past 22,500? It's been trying to do that for the last 3 trading sessions. It has failed in all 3 of them. Does it have enough legs to go past that level? One, and also couple that with your stock recommendations as well.
Yeah, I think a number of these large cap companies, they are consolidating after hitting their immediate highest levels. So like Reliance Industries, it's still putting very close to its previous highest level of 3,000. State Bank of India is again gaining the momentum, and HDFC Bank, which was completely underperforming, is now doing much better than, or maybe relatively outperforming than other stocks. So I think based on the overall setup, and see technology stocks, they have already fallen to their important levels. So I'm not expecting any major crash in tech companies, but BFSI is doing well. Metals, they are participating into the overall momentum. And whenever there is momentum in the market, we see the market crossing its previous high. So I think, yes, the market is all set ready to cross this level. But because of there are number of events which are lined up for this week, we may see some sideways consolidation. But eventually, I think the market is going to cross this level.
Okay, all right. Thank you so much, Srikanth, for joining us. That's Nifty Metal up around 1.5% that we're seeing right now. We'll slip into a short break. When we come back, we'll be joined by the management of Datamatics to discuss the company's business outlook going ahead, and most importantly, the acquisition that the company just made. Stay tuned for that.
Welcome back to Midcap Radar. Onto a corporate conversation now, and Datamatics Global Services is the company in focus. They recently acquired Dextra Digital, which is a Salesforce service provider, for 143 crore rupees. To discuss the business opportunities for this acquisition and more, we are being joined by Rahul Kanoria, who is the Vice Chairman and CEO of Datamatics. Mr. Kanoria, good afternoon. Thank you so much for joining us this afternoon. Can you tell us more about this acquisition that you have made? What are the margins of the acquired company that you have done? And is it going to be an EBITDA and EPS accretive acquisition right from the onset?
No, absolutely. So we acquired it because of our focus on the hyperscalers. We've been talking about it for a while. We've been looking at some companies. So this is very much in line with our strategy. Their EBITDA is at about 19%. So they have a very healthy EBITDA and a very healthy growth rate. So from day one, we'll have an accretive EBITDA as well as revenue in terms of a growth.
And how much would that be, Mr. Kanoria? If you can give us a sense of how much of an accretion are you seeing? What kind of synergies will this mean? And will it give you more access to newer markets or newer segments?
More than newer markets and newer segments, it will allow us to cross-sell their credentials into our customer base, which is very important. Also, our scale allows them to sign many larger deals, which today, because of the size, they are not able to do. In terms of digital technologies, the EBITDA creation will be about 0.9%, and on revenue about 9.7%. On an overall Datamatics level, though, it will be small because this is a very small company. So on an overall basis, the revenue would be about 4% and EBITDA impact would be about 0.2%. If I prorate this number for the last 9 months of last year.
Right. Mr. Kanodia, Can you quantify the number, the incremental revenue contribution? Like you mentioned it, around 4% is the figure that you gave to the overall number. But is there a number that you can give, since the company itself has a 60 crore revenue? So how much would that add to your own top line?
Yeah, so $7.2 million is their revenue for estimated for this year. So that's really what it'll add to the top line. And on the EBITDA level, they're at about 19% EBITDA. So you're talking about 700K.
Okay, all right. Now let's talk about the cash in your books. 595 crores as of December. How much of this will be used for this acquisition? What will you be left with? Is there any other acquisition which is on the cards which we could see in this calendar year itself?
So the impact is we are paying out about 143 crores upfront, and then there is an earnout over the next 2 years. So it's all from internal accruals. The impact on Datamax will be nothing. We are not levered at all. In terms of additional acquisitions, we are talking to a few companies. But as you know, we've been very selective with the companies we acquire. So we will continue to be selective and do a detailed due diligence. But yeah, we are in dialogue with some other companies as well.
Do we hear an announcement anytime soon, Mr. Kanodia?
Nothing on the cards that's going to happen immediately.
All right. I had to ask you about the business as well, Mr. Kanodia. In the December quarter, the growth slowed down. Both revenues were down, both sequentially as well as on a year-on-year basis. You also attributed in the earnings call that there has been a delay in certain projects. Has that persisted in the March quarter as well? Have all those projects that were facing delays, have they resumed? And have there been any cancellations as well?
So we announced a cancellation. We cancelled the deal because of the payment terms, and we've announced that to the stock exchange. Outside of that, in terms of the quarter's performance, really, right now, because we are in the silent period, I don't think I would be able to talk too much. But we had projected a 11 to 12% growth over Q3 of last year, and we will stay with that.
Okay. I would like to come back to the acquisition. You have to pay the additional 30.6 crores based on milestones. Can you give us a sense of when do these payouts happen?
They happen in 12 months from now and 24 months from now. So next 2 years, there are milestones, there are targets that are set, and basis that achievement, they will be paid out.
Okay, so it'll be after 2 years that you'll start making the payments, these milestone payments, or by the second year you'll complete all these milestone payments?
That is correct. The first one will be after 12 months. The second one will be after 24 months, which will be the completion of the deal.
Okay.
Your third quarter deal pipeline, Mr. Kanodia, was around $245 million. It was around $290 million in the second quarter. What's the run rate we are going with right now? And is there a number that you have in mind for FY25 as well?
No, so that number remains steady. And as I said, because of the quarter ending, we will talk about this once the board meeting is over and we have our investor call. That's when we'll talk more about these. But it remains steady.
Okay. All right. So I know you did indicate that you're in the silent period and you cannot give us more details. But generally, because we've been getting a lot of commentary, what is FY25 looking like in general? Not quantitatively, but qualitatively, if you can give us a sense of, is the pipeline strong and what is demand at the end user level in different sectors?
Sure. So generally, it looks healthier than the last year. So we are not really looking at sectors, but by and large, the sectors are looking good for us. We are not so heavily dependent on the banking sector, which is having a struggle, and many companies are feeling the pressure in the banking sector. And because Datamax is not heavy on that segment, we don't see that impacting our performance next year.
Not asking you for an exact number, Mr. Kanodia, but margins have slowed down to 14%. Do we see that number going back to 20, 18, 19, 20 as we go into FY25?
Yeah, as I said in last investor call in Q3, we had talked about an improvement in margins, and we will certainly see that improvement in the next year.
Okay, all right. Thank you so much, Mr. Kanodia. The stock is high by 2% of the day's high. So we'll see which way things go in quarter 4. But you did indicate that FY25 is turning out to be better than FY24. We are in FY25 now. Oh my God. Okay. I was not very sure if I'm saying the right thing, but yes.
We are into FY25. Yes, indeed. And the stock is reacting to the management commentary. It's now recovering a bit. It's seen a bit of a spike in the last few minutes. So Datamax, they're 2% higher at 590. FY25 is looking better. well and truly into FY25 now. But before we slip into a short break, here's something you must not miss out on CNBC-TV18, and it is presenting India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. Mapping the macros with City India economists Samir and Chakrabarti, catch a jugalbandi between market veterans Manish Chokhani and Ramdev Agrawal, the return of the animal spirit within India Inc. in a conversation with V. Vaidyanathan of IDFC First Bank, K.K. Mistry and Manish Kejriwal of Kedara Capital, and chasing alpha with market experts like Nilesh Shah of Kotak, Prashant Khemka of White Oak Capital, and Anish Tokli of ICICI Prudential. Don't miss out on this one. Tune in to CNBC TV 18 on the 4th of April, 5:30 p.m. onwards.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, the midcaps that they continue to do well, and one of the midcaps that I'm focusing on our midcap spotlight segment is Best Agro Life. The stock is up 41% in last two trading sessions, and we were discussing about the stock yesterday as well. It's logged an upper circuit again, and that one is up 20%. And I was wondering what has really happened here. Now, on 28th of March, the company announced that they have acquired 100% stake in Sudarshan Farm Chemicals, and the estimated enterprise value here is 139 crore rupees. But the company says after adjusting for some working capital adjustments and other things, the actual cash outflow is only 9.5 crore rupees. The acquisition falls within related party transaction because one of the directors is common in one of the subsidiary and this particular acquired company as well, which is Mr. Pramod Narayan Karlekar. He is a common director in both these companies as well. Now, the turnover of the acquired company in FY23, it was around 30 crore rupees, which is lower than FY22 levels of 49 crore rupees and FY21 at 67 crore rupees. The company says acquisition is a step towards expanding the existing business operations and market footprint as well. Now, very important to understand why am I focusing on Best Agro Life here is because cash flow has been a big problem for them, and this is an all cash deal. Even though their cash outflow is only 9.5 crore here, we need to understand that their cash conversion cycle has been very high, and this is something that the management has been questioned about a lot of times as well. In fact, in last 3 years, this cash from operating activities has only deteriorated. It was negative 180 crore rupees in FY23, which compares with negative 60 crores, and before that it was around 13 crore rupees. Their debtor days are high as well, 73 days there. Creditor days are 167, so it has been on a higher levels in terms of the balance sheet condition. It has continued to be very stretched. Now, this is something that has been a question for the management, and they keep saying they will improve their cash conversion cycle. In fact, in November, they had indicated that the cash conversion cycle would improve by 20 to 22 days. That is something that the street wants to take a look at as well. In terms of shareholding, there's Quant Mutual Fund, the small cap fund, which has 2.11% stake. Resonance Opportunities Fund is around 8.15% stake, and promoters have around 50.1% stake. But yes, this is a big move that we are seeing in the stock. So I just wanted to put these risks on the table as well, that while they are going and acquiring something and the street seems very excited about it, keep these things in focus that the balance sheet continues to be very stretched, and the stock on the back of this has seen a decline of 36% in last 1 year. Of course, the agrochemical space was also under pressure, but these are some things which are very particular to this particular company.
Last 2 days, it's been the best outcome, but you can't really say that when you compare the last 12 months. But nonetheless, 20% higher for Best Agro Life. And speaking of stretched balance sheets, there were some flashes on your screen just a while ago that JK Cements is planning to mortgage some assets of the company to avail loans worth 12,000 crore rupees. So pull up that stock as well. That's seen a bit of a negative reaction there. You can see it slipped into the red now after the news flow there. Now 0.3% lower at 4270. But Sonal, since we like to keep you busy, there's real estate as well. There are a lot of brokerage commentary coming in on these real estate stocks.
And there's nothing stopping the Realty names after some bit of pressure that we saw in the month gone by. So now there's a brokerage note from Morgan Stanley where they have upgraded Godrej Properties to an overweight. They have increased the target price as well to 2,500 from 2,050. DLF has been downgraded to an equal weight, but the target has been raised to 900 versus 700 earlier. They say that they expect FY25 guidance of growth for 10 to 20%, which will be lower than the FY24 growth that we've seen, 30 to 40%. But that is something which is expected because that was a big big growth that they saw in FY24. Now, Prestige and Godrej Properties, they should grow faster in terms of pre-sales. And as pre-sales slow, markets may focus on return on equity, where Macrotech and Oberoi are better placed. Now, remember, Oberoi has done well, but in terms of pre-sales, it hasn't done so well versus, say, a Prestige or a DLF. So now a lot of these projects will come on stream, and that could convert into, sales for them. So important to note that as well, that FY25 is expected to be lower because the big number that we saw in FY24. But Morgan Stanley continues to be very bullish here.
We'll see all of that when the numbers come out in a few days' time. Where Prestige Estates is the one, right? On the 19th of March, when it fell for the 8th day in a row, it was at 992, and it's recovered all of those losses and a little more. Now it's back above 1350. So unstoppable there. Prestige Estates 35% higher now since the 19th of March. They're great goings there, 16% in the last 7 days. So real estate stocks continue to grow from strength to strength. But moving on, the Ministry of Finance had imposed an anti-dumping duty on para-tertiary butyl phenol last month. In fact, we spoke to Vinati Saraf Mutreja, the managing director of Vinati Organics, to discuss the impact of this on their business. Listen to what she had to say.
We are seeing a very good recovery in demand for most of our products. The destocking seems to be over. Customers are sitting on very little or zero inventory, and hence the reordering has picked up. So Q4, we've seen that trend from Q4, and we expect FY25 to be 20-25% higher than FY24.
Vinati Organics there speaking to CNBC-TV18. But another mover in today's trading session is Tata Technologies, and that has entered into a 50-50 joint venture with BMW to provide automotive software for the car makers, premium vehicles, and the digital transformation of its business. Rima is here to tell us more. Rima, over to you.
As you rightly pointed out, Tata Tech has entered into a joint venture partnership with BMW. Now, the focus of this particular partnership will be, one, to come up with automotive software for their premium vehicles, but two, they also are going to help with the digital transformation of their entire IT business. So that's important. Thirdly, note that the company, this will be a joint venture, a 50-50 kind of a joint venture. While the value of the deal, this partnership is not known, how much it will contribute, but you can gauge its importance by the number of employees Tata Tech plans to staff. So what the company has said is initially Tata Tech will staff about 100 of its employees on this particular joint venture, but that number will soon go up to 4 digits. That's 1,000 employees plus. So that gives you an indication that the scale up, the ramp up of this deal could be fairly significant. Also, why the street is very excited is that for Tata Tech, one of the big risks or concerns in the market was its dependence on the Tata Group, particularly Tata Motors and JLR. I think it contributes more than about 30% to its overall revenues. Now that when you onboard another auto OEM and a large one like BMW, and you will be doing software for them, you will be coming up with the entire digital transformation. While the value of the deal is not known, the hope is that it will help in bringing down the client concentration risk, and that's also what the street is excited about. Back to you.
Street is indeed excited about it. 4.5% higher on Tata Technologies, almost at 1100 now. What's also doing well though is IRCTC. That stock is up 3.5%, near the highest point of the day, and it is trading with strong gains and on extremely strong volumes as well. It's crossed the mark of 1,000 rupees in today's session, has IRCTC. The small cap index grows from strength to strength and now is up 1%. And on that positive note, it's time to call curtains on this edition of Midcap Radar. From Sonal, myself, and the team that put this show together, thank you so much for watching. MF Corner on the other side.